Hey, what's up, everybody? I didn't realize that you guys can see this before I went live. But anyway, today I want to talk about why I believe Warren Buffett has purchased shares of Alibaba. Um, so, the reason why I wanted to go over this is because not too long ago I posted this community post that said, in my opinion, Warren Buffett is buying shares of Alibaba stock. And I got a couple questions of people asking me why I believe that's true. And I told them not to listen to me until it becomes known. And this was before the 13F filing that Berkshire released and the Daily Journal meeting where Charlie Munger said that it falls outside of Warren Buffett's circle of competence. Yet I wanted to explain why I still believe Warren Buffett purchased shares of Alibaba. I don't think it's been disproven yet. And that's because Warren Buffett could still buy shares on the Hong Kong exchange and have it not be listed on the 13F filing or many other things. So I want to explain my reasoning why I think he has it. And I don't think it's a huge position, but also why I don't think it's been disproven just yet. And maybe he's still buying. So first, I want to talk about the 13F disclosure and why it might not show up. So for those who don't know, Warren Buffett has the ability to buy shares of Alibaba on the Hong Kong exchange. And the only time that he has to tell people that he bought Alibaba is if he exceeds a 5% holding in the company. That way it would be shown on the Hong Kong exchange. So he could have 4% ownership in the company and still not have to disclose it. Right now, Alibaba is trading at a market cap of 300 billion. So 4% leaves him at 12 billion. So he can still put a huge chunk into Alibaba without having it being disclosed. But let's just keep going. And the way I want to start about this is first by thinking about if it fits Warren Buffett's financials. So when I think about the best investments that have ever been made, and you might think of this too, some people might jump to George Soros and his bet against the European Union. Some people might think about Bill Ackman and his short against the COVID scare in 2020, right? But another one that jumps out to us and is my favorite investment of all time, and I think is the greatest investment, is Warren Buffett's purchase in Apple. Now, prior to his investment in Apple, a lot of people believe that Apple fit outside Warren Buffett's circle of competence. And he said it over the years that he's just not comfortable with Apple and technology as an investment because it's really hard for him to predict. But that didn't stop him from investing in Apple in 2016. And I wanted to pull up the value line of Apple about when Warren Buffett was buying. So this one is October 2nd, 2015. And this is a file that I keep on my desk and at my office as a reminder of what I should use as a benchmark when I'm looking to invest in a company. And I want to show you how absolutely similar it is to Alibaba. So on a financial standpoint, the reason why I believe that it fits Warren Buffett's criteria is this. So if we look at the sales per share, you can see that Apple, and we'll just look at the last 5 years, went from 10 to 16 to 23 to 27 to 31 to 40. So you can see it's consistently growing. It's very predictable, and it doubles about every 2 years or so. The same story is true for the cash flow per share. So you went from 2 to 4 to 7, I guess 6, 7, 8, 10. Same story. Earnings per share, same thing. From 2 to 4 to 6 to 6 to 6.5 to 9 and about 10. And then the dividends. Apple really had no dividends up until 2012, I believe, when Carl Icahn came in and suggested they do dividends. And I think if you watch Carl Icahn's documentary, just as a quick digression, I think Tim Cook at the time was considering doing dividends, but he needed to convince the board or something like this. But relatively small in terms of the company. It was 2%, and I think it was paid annually or something like this. And as value investors, that's typically what we want to see: less dividends, more repurchases and stuff like this, because it's not as tax efficient. We can do manufactured dividends. But anyway, so book value, actually I skipped one. Capital spending per share in 2015 was about 2, and the share price was 100. So we're looking about 1/50th. That's really low. Book value per share was about 5 times book value. Common shares outstanding were decreasing. They were repurchasing their shares. Historically low PE ratio. As it sits in this form, the trailing PE ratio is about 13, really low. And if we do just kind of a quick Lee Lu Warren Buffett exercise to figure out like a return on deployed capital, we can take the sales, so about 230,000, I'm sorry, $1 billion, multiplied by the operating margin to get operating revenue. And I'm going to say it's about 30%. So you get about $69 billion in operating revenue. And if you divide that by the shareholders' equity, even without considering cash or debt or stuff like this, if we just divide that by $130 billion that we see for shareholders' equity, we get a return on deployed capital of about 50%. And then if we look at the return on shareholders' capital and the return on total capital, we see consistently 20% and beyond percentage points. So very consistent on the earnings and some of the metrics that we have here. And then we look at the balance sheet. So it had total debt of around $45 billion and $34 billion in cash, which means they could pay half of it just by cash. And if we look at the net profit, it's about $50 billion, which means in 1 year's time, maybe even 2 years' time, we can pay off the total debt. So they're sitting pretty, 27% in terms of interest, really low. So this is Apple and probably the greatest investment that Warren Buffett's ever made. So now let's jump into Alibaba and just show you how similar it is on the financial standpoint. So if we look at the trailing PE ratio, we get 14. The PE ratio, current PE ratio was 12, just like Apple was 12. The relative PE ratio, about 0.7 for Apple, about 0.7. The recent price for Alibaba, 120. It's actually down to 110 right now, so it's even better condition than what this value line report says, but we'll just keep moving. So the exact same story with all the metrics we have on this table here. So revenues per ADS goes from 15 to 20 to 25 to 40 to 50, about doubling every 2 years, consistently growing, very predictable. Cash flow, same story, 6, 7, 8, 10, 11. These numbers aren't confirmed yet. We're going to get them tomorrow at 7:30, but no dividends declared just yet. That's really good for us. We like that. So it's even better than Apple right now, because this is telling me that they have places to put their money. And in case of Apple, they had too much cash and they had to get rid of it. Capital spending per ADS, about 2 for a stock price of 100, 150th. It's like the same story as Apple, right? The shares outstanding decreasing in recent times, and they'll continue to repurchase their shares, I guess. Historically low PE ratio. I mean, all the numbers are about the same. So if we do a really quick return on deployed capital, just like we did, revenues are about 130 billion, and I'm going to say the operating margin was about 30%. So this time we get $40 billion in operating revenue, and if we divide it by the shareholders' equity, even without considering cash, of about $160 billion. This time we get 25%, which is a lot lower. But I think the balance sheet, just quickly scanning over, Alibaba is in a better position than Apple was. So before I do that, though, I just want to say return on total capital and return on shareholders' equity, mid-teens, low 20s, pretty consistent. So now if we look at the balance sheet, this time Alibaba is sitting a little prettier. So instead of 54 billion, I believe Apple had, this time around we had 23 billion, and of the interest only 13% is covered, so it's in a better position. How much cash do they have? About 70 billion, and I believe that's before they had to pay their bill to China, so to the CCP, because of their fine, but still pretty good, because that means 3 times over they can cover their debt. And again, this is a quick scan, there's way more to do, but and then if we look at the net profit of about $26 billion, we can cover the debt in 1 year. So it's almost identical. I have both Alibaba and Apple printed out on my wall. And I say, before I make any investment, I have to look at those as part of my checklist and say, are these better or equal to my benchmark for a huge holding in my portfolio? So on a financial standpoint, if I look at Alibaba, I say this fits the financial backbone of what Warren Buffett's bought in the past, not just with Apple, but with Bank of America and other huge, American Express and other massive positions in his portfolio before. So people think that Alibaba doesn't fit within Warren Buffett's circle of competence. And they'd be right to say that because Charlie Munger even confirmed it. But I don't think it has to stay outside of his circle of competence just like we've seen with Apple. And if anything is an indication of that, I think it's BYD. BYD is both a tech stock and a Chinese stock, so it fits the bill. Now, if we look at Warren Buffett's portfolio in the past, actually, this is his last annual report, the 2020 annual report. We see that he's bought BYD, although it's been a super, super small position at cost. I mean, it was $232 million. I mean, it's super insignificant. If he were buying Alibaba, I'd suggest, or if he were buying Alibaba, I would assume that it would be some small position like this too, especially because U.S. and foreign companies aren't allowed to own more than 50% of a Chinese company anyway. So I think that's another deterrent from allowing him to go big into the position of Alibaba. But we see it here, unlike if we were to look at Datarama, we actually wouldn't see it because Datarama doesn't compile the foreign filings. Now, so I covered why, in a financial standpoint, why it's similar, and pretty much fundamentally, it doesn't keep them from containing Alibaba in his circle of competence. But now let's talk about how similar Warren Buffett and Charlie Munger are, and the psychology that I believe they share. So if you watch many videos about Charlie Munger and Warren Buffett, you get the sense that they're pretty much identical people. They differ absolutely in some points, but I want to talk about how similar they are. Recently, I read this book, and it was just kind of a fresh way in my mind to show you why I think they're so similar. So right here it says, though Munger does not approve of the practice, many investors pore over Wesco's Form 10K filing for insight into Buffett's investing style at Berkshire Hathaway. To investors trying to copy Buffett, this seems to be logical since Berkshire owns many of the same stocks that Wesco holds. And the same is true for Daily Journal. Charlie Munger was a part of Wesco, now he's a part of Daily Journal. So there's no difference there. And if you look at like Charlie Munger's holdings, you can see the huge influence that each other have and the huge overlap. Bank of America is also a huge position with Warren Buffett. Wells Fargo used to be shared by Warren Buffett, but he since went out. It's curious why we don't see Apple in here, but we do have Alibaba. So I wouldn't be surprised if Warren Buffett's got some small position of Alibaba. So let's keep going and just say another thing that was said by Katharine Graham, the former CEO of the Washington Post. She said, my closest affiliation with Charlie Munger is a strange one, said Katharine Graham, retired publisher of the Washington Post. At first, I consulted him because I found myself in charge of not only a company, but in charge of children's and grandchildren's trusts and with no experience. I asked Warren's advice, and he did what he very typically does. This is what I think, but talk to my partner, Charlie. He agrees with my position on most things. So the reason why I would say that's pretty largely my reasoning why Warren Buffett probably bought some shares of Alibaba, if not for Berkshire Hathaway, but maybe his personal account or something like this. But maybe there are reasons why he hadn't. I mean, we just talked about the circle of competence. Maybe he doesn't believe in the Chinese accounting and stuff like this, which I find hard to believe because he's bought shares of BYD before. And I think he, like Li Lu, knows that it actually doesn't matter if they come from China, essentially. It matters more on the person. It's like just because they're a Chinese company doesn't mean their accounting has to be bad. Like if all your neighbors are bad people, that doesn't make you a bad person. So I think it really depends on the company itself and maybe the reputation that Alibaba has with the company, with the CCP might dissuade Warren Buffett too. But another reason why Warren Buffett might not be buying Berkshire Hathaway is maybe the Buffett indicator. He said in the past, and you can see it from like The Snowball by Alice Schroeder, that this is pretty good as an indication of how Warren Buffett feels about the market. So if yes, Alibaba looks great from a financial standpoint, but if he believes his opportunity cost would be better served waiting for valuations to come down as they did in 2000, it could be likely that he's waiting to buy Google or something like this, where he said Google was a company better than Berkshire. He said that in the past. But I just can't see why he wouldn't throw a little bit of money into Alibaba. It just seems weird to me not to. especially when he's buying stocks like Verizon just for dividends. I wouldn't put it past him. So I wouldn't say that I'm certain he's buying stock in Alibaba. I would just say it's likely, I think, is probably the best indication. But all right, let me just go to the questions real quick and see if I didn't confuse anybody or if anybody's telling me I'm an idiot. So let's see. Andrew Lopez says, Buffett buying Baba shares seems risky. I'm sticking to more conservative stocks. I should have known. I should have been able to quote that question without even looking at it. And then we have Diraj, I think is how you pronounce it. I'm not too sure. I'm sorry if I butchered that. He says, Madman. True. Buffett bought Baba. I thought it was Munger. Yes, Munger's been confirmed. Warren Buffett has not been confirmed, although I think he probably has some small position. And then Daraj says, nah, Buffett hasn't officially bought. Just answering the comment before. So those are my opinions. If you have any questions, feel free to leave me something in the comment section. Or if you think I'm crazy or I missed something, hit me up, sure. But that's it. Thank you so much, and until next time.